Mr. Kalyana Rama also joining us now, the CMD at Container Corp. Lots to discuss with him as well, particularly, of course, earnings. And we've seen a sharp dip in PAT in the last quarter with operating costs weighing in. Mr. Rama, thanks so much for joining us. Let me get a sense from you in terms of some of the challenges that you were dealing with this last quarter.
Yeah, morning. Of course, we had a lot of one-time expenses to be booked in the last quarter because of change in some of the charges which railways were levying on us, particularly the land license fee. So earlier we were paying on TU basis. This time we have to pay on 6% of the land value. So there were some calculations which we depended on for the market valuation, but ultimately we settled for market value, present market value. That increased the impact in the last quarter. In addition to that, we were right-sizing our depots. So in that, we have given up some 16 depots over the current last year, FY. So there were some assets. So these assets have to be written off because those assets we can't recover back. So there was a writing of that. And moreover, one more one-time expense of provisioning for post-retirement medical expenses for the employees. Because we are on the divestment the portfolio of our government. So anytime the strategic divestment may take place in this company, if we have continued with as a PSU, these post-retirement medical expenses would have been given as and when required. But now we have contributed the entire amount to make our balance sheet clear for the purpose of divestment. So these are the expenses actually affected the profit. Otherwise, if we make apple-to-apple comparison, our operating margin has in fact increased by around 125 basis points over the last year. And also in this quarter, we did very well. If you look at the operating income, what we got in this quarter, this is the best ever quarter our company has achieved at 1,940 crores operating income.
Okay, but going forward, what's your outlook when it comes to the industry in terms of business picking up, the recovery? What is your sense going forward? What's the kind of outlook that you factored in for the next couple of quarters?
This financial year, it will be definitely better than the last financial year. Even last financial year, I would like to mention here one or two things. See, even with the lockdowns, with the COVID raging around, the pandemic, Concor never closed down for a single day and we continuously worked. And in fact, I appreciate my workforce, my colleagues, putting a brave front in this entire pandemic, even though almost 30-35% of our people also got affected with COVID positive. But we could carry on without any break. And also a good recovery, and compared to the operating income we could see, we almost ended up flat with the last year, where we expected initially we'll lose 20%. Comparing to that scenario, this financial year, at this moment, I expect the operating income to increase by 12%. In fact, the profit, and coming to the bottom line, I am very hopeful it will be almost double, 100% growth may be there, because all the one-time expenses we cleared off, and the new LLF regime we got adapted to it. And we are also going for working out a long-term lease for the railway land to put an end to the uncertainty of these land licensing fees. So all these things will help. And so at this moment, my forecasting for this financial year is 12% growth in the top line and 100% growth in the bottom line.
How soon do you think the land lease would be settled? And what would be the nature of the land lease contracts when you would be renewing them?
Land lease is now settled. It is 6% of the current market value. So for this year, we already right-sized the land, what we have taken from the railways. So we gave away some terminals, and some other terminals, some of the land we returned back. So after all the right-sizing, our expectation of land license fee for this year will be around 450 crores. So that is at the market value as per the revenue records what we gather from the revenue authorities every year. The railways also does that and we also do that verifications. And also, as I mentioned, we are working on a long-term lease by paying the 99% value of the land to the railways. If it works out, that will be for next 35 years, these land will be leased to the Concor. So that's the work is going on in that.
Okay. What would be the saving if the land lease is negotiated at market value? Because like you said, that is a challenge and that is something which in a sense has been an irritant in the disinvestment process and for your investors also. Every time I interact with some of your investors, they simply want to understand two things. When will the strategic disinvestment move, which certainly is not in your hand, but they also want to know that what is the future of land lease.
Yeah, so as you well said, strategic investment I can't comment on, but regarding the land license fee, I think I have given very clear clarity now. Now the land license fee is settled at the 6% of the market value. So last year we calculated with the market value calculations because we had some long old leasings signed long back. So but ultimately we came to the formula that the current market value to be taken. So that is where the entire the additional land license fee that originally I expected it will be 450 crores and that come to around 650 crores. Now that after giving away the certain terminals, there is no uncertainty now. We can calculate that in the beginning of the year. That is why I am mentioning this year our land licensing fee will be 450 crores. That is at the 6% of the market value, which we know on 1st of April 21 what is my market value of the land of railway land which I am holding. So it's very clear. So this gives a very clear clarity. This is 6% of the market value. In fact, there is some benefit coming up because at TKD, the Delhi government has reduced the market values for this current year. So that is in fact benefiting the company.
What happens in a lockdown? Because in a lockdown, everybody would say that, look, railways will be a preferred mode rather than road transport. Every time a lockdown is happening, are you benefiting because of this?
See, we are seeing a continuous growth. That's we could see right from October onwards. So yes, you are right. One is that there is some shift from road to rail. I think the customers are also understanding the rail transport is much, reliable and safer and faster. So that also is giving a benefit to us. As lockdown happens, really the much benefit will not come because there is effect on loading and unloading operations as well because of the lockdown, because of non-availability of labor and all those things. But having said that, there is not a sharp fall in any of the demand. We could maintain our volumes. And I expect that will continue and moreover the DFC is coming up. That also will add something to our kitty. So it will be a good year this financial year to look at.
Now, typically the way we understand railways is used for bulk transportation, whether it is steel, coal, or even grain. Economic activity has started. Steel prices, metal prices, coal prices are at an all-time high. Is there a direct correlation between economic activity and the underlying commodity demand in your business?
For the domestic business, yes. So that is where we could see good growth in the last year in the domestic, particularly in the second half of the last financial year. So if I look at my figures, in domestic sector, we could see a marginal growth in our originating loading and handling volumes compared to last year, around 3% growth we could see. In EXIM, we just remained flat in our originating loading. So, and we expect this domestic demand to further go up because of the demand in these core sectors, as you mentioned. As far as EXIM operations are concerned, it depends on how we have the edge in our export. This year it is good because the agricultural production is good. So a lot of rice got exported, sugar is getting exported. So the monsoon is good this year, the exports will increase. So there is, even though there is some shortage of containers in India because of low imports, but a lot of empty repositioning is happening. And maybe here it will be interesting to know that we gave a new scheme this year from 1st of April. We announced a 50% reduction, 50% rebate on movement of empty containers for loading to our depots for exports from gateway ports. That has become really a very popular scheme. This, of course, this is in this financial year we announced this from 1st of April. We have seen for 45 days and then now we extended it for the whole financial year. This is benefiting the exporters very much. A lot of empty boxes are moving into the hinterland, picking up the exports. In fact, if I mention that the growth percentage, what we got is in first 40 days is something 260% more empties got repositioned into our ICDs from gateway ports.
Sure. Mr. Rama, pleasure having you on the show today. Thank you so much for speaking with us.
Thank you.